Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on September 20th. My name's Ian Saunders, and I'm joined here with Trevor. How's it going, Trevor?
Doing well. How are you today, Ian?
Doing well, doing well. This is your first podcast since coming back on full time, is it?
This is actually my first podcast full time. I was on it last summer though, as
You
an
were,
intern.
yeah. I remember we had nice like three-person seating arrangement. You were staring down the camera the whole time,
Mm-hmm.
right?
Me and you,
Um,
David.
yeah. So Trevor's the newest member of our analyst team. He came in July, right? Was
June, but
June, right? Yeah. So it's coming up the ranks quick, so we want to get him out and talking to everybody as soon as possible. Definitely a lot to talk about this
yeah, a
week.
lot to unpack.
Yeah, it's the markets are back taking us back to school, I guess, right? I mean, we
Mm-hmm.
have coming in this fall, a lot of uncertainty going into broader market action. Had a lot of questions kind of coming into when is the Fed going to start cutting rates? We're supposed to have 7 rate cuts this year at the start of the year. Obviously, it's not come to fruition. We did get our first rate cut this week, though. So during the market action on Wednesday, September 18th, I believe, the Fed Chair Jerome Powell announced that it was going to be a 50 basis point cut instead of 25. Right? I know you had some notes on that. There's some interesting stuff like the first person dissenting since when was the date? 2005.
Yeah, one of the governors did dissent, and that's the first time since 2005.
Right.
I know they also projected in the median forecast about 100 basis points cuts total this year, so about two more 25 basis points
Right,
coming.
which you would expect to November and December, the two separate 25 basis point cuts. I mean, it's a lot of conversation going on around that. Markets saw a lot of back and forth action after
Mhm.
that happened yesterday. At one point, we're up 1%, then we're flat, then we're back up, then we're down. We ended up slightly lower on the day for most of the major indices, but then overnight, everyone kind of realized, you know what, this is actually probably a good thing for at least equity markets right now. And you have most of the major indices up 1 to 2% at the time of this recording, at least on that we're recording this Thursday afternoon. Pretty sharp turnaround overnight.
Yeah, and actually, as a result, I think we are seeing now some all-time highs for the S&P 500 today, this
Yeah.
Thursday.
Yeah, we are. I mean, you're coming into Thursday, S&P is up almost about 1.8% at the time of this recording. And you get a spread triple top breakout. So breaking outside of resistance at 5650, hitting that 5700 level for the first time. So, like you said, new all-time highs that we're seeing there. Continuing to tick up a little bit higher. It's about 20 points higher from that 5700 mark, 5720, at least at the time of this recording on Thursday. It's a S&P's a pretty good looking chart. I mean, you get support right around the midpoint on its trading band at 54.50. Further support down at those August lows at 51.50. But it's not like we've seen the S&P chart at other times when you just get this massive stem, right? It's been a
The
pretty consistent
persistent
improvement.
gradual rise, yeah.
Yeah.
Besides that one sell signal we saw in beginning of August, it's been pretty consistent over the last year since December of 2023.
Yeah.
Pretty consistent rise.
Yeah, I mean, you cover up the name, right? And you just look at the chart and you're like, pretty good looking chart. And interestingly enough, when you come in and look at some other areas too, so the S&P 500 that we're looking at there, the cap weight version, if you look at the equal weight version, so like through the ETF representative, RSP, the Invesco S&P 500 equal weight ETF, also at all-time highs. That has not seen the same level of improvement that we've seen from the cap weighted S&P. I believe cap weighted S&P is up almost 18%, and the equal weight S&P is up almost 12%. So still a gap from a performance perspective, but a little bit more consistent improvement from the equal weight camp recently. Didn't see the magnitude of maybe volatility that some of the cap weighted
Yeah, so
representatives did.
definitely taking some less downside during these recent market drawdowns, which is why I was able to actually reclaim some of those all-time highs before the broader S&P 500 due to some kind of strong market participation as of late.
Yeah, I mean you're seeing. I mean, and that's it wasn't up as much, and so it didn't go down as much, and then it made those new all-time highs quicker, like you said. You look at the RSP chart. I mean, again, pretty good looking chart. You got 3 consecutive buy signals, a little bit more overbought than the cap weighted benchmark there, but nonetheless a pretty strong looking technical picture. At the end of the day, the stocks look pretty healthy, both from a cap weighted and equal weight, which is different than we saw for the first like 6 months of the year. Everyone's Mag 7 this, Mag 7 that, right? You have
Definitely a much different story than
yeah,
2023.
you had so much of the leadership in just a small amount of names, and now you're seeing that leadership really broaden out, right? To your point, you're seeing more participation, and some of the technical indicators we have are showing some of that participation, right?
Yeah, one notable indicator that's seen some improvement is the bullish percents for the S&P 500 or that BPSPX, reaching some of its highest levels in quite a while. We're now at 74% of S&P 500 charts being on a buy signal, which is its highest levels since January of this year, which overall pretty good sign for intermediate strength for the market.
Right. And when you're looking at that chart, I mean, we don't look at resistance the same way we would look at on these charts, as you said, they're percentage based. So the way you said it, they're 74% on a buy signal. I mean, we're looking at just the number of names in the S&P on a buy signal. But you do look at those historical levels as kind of like a line in the sand. Like, are we showing more participation now than we were in the past? And I do think it's important to note that we're showing the most participation from that intermediate term, near to intermediate term bullish percent BPSPX perspective since January. So, I mean, we've been hitting new all-time highs at different points throughout the year, right? But we're showing more names on buy signals, more names showing bullish movement, bullish percent, showing bullish movement that we have since January when it was moving lower, right? So last time we were in a column of X's at this level, you got to go back to December of last year. And so 74% does seem high. And when you look on the chart, the last few times we've gotten close to 80, we haven't actually gotten to 80 since August of 2022. The last few times we got close to 80, we've seen reversals. We've seen movement lower. Reversals lower on participation charts like this. I want to make sure to make clear it's not necessarily a bad omen for future movement. At the end of the day, when you see these indicators at high levels, you can kind of think of that as like a breadth thrust, right? You're showing more participation, which is typically pretty good for longer term returns. Yeah, you might see some consolidation, you might see a pullback, but at the end of the day, it's a good thing with more stocks moving higher, right?
And the long-term picture is what matters and
Right.
the most going forward.
Right. And you still see, I mean, Nasdaq Equities up the top of all of our relative rankings across the platform. That remained unchanged in the face of uncertainty that we saw coming in to this potential rate hike. But we're seeing some other areas. I mean, you're looking at other areas. The cap weighted S&P was the dominant player that we saw throughout the prior 18 months, 2023 and the first part of 2024. The cap weighted, like we said, also at all-time highs. Now we're seeing some other areas start to come back. Your mid caps, your small caps, some other names are showing more bullish participation, right?
Yeah, if you look at some of those bullish percents for both the mid cap and the small cap, you're seeing some similar rises, not quite to the level of the S&P 500 just yet, but we are still seeing some solid improvement and definitely its highest levels in at least a couple months for the mid cap. And you like to see its kind of improvement as of late, nearing the 60-ish, 65% level.
Yeah. And when you're, I mean, the things you can like, so you can look at signals, you can look at patterns, but we don't look at those on these charts. The important things are what column are we in and what level are we at, right? Are we moving higher or lower? X is moving higher, O is moving lower. And then where are we on the chart? And to your point, you see the S&P up in the 70s. You see or S&P 500, sorry, large caps up in the 70s. You see the mid cap 400 in the 60s, and then the small cap is down in the 50s. So you are seeing not as much participation from the smaller names, which makes sense given they haven't shown as much improvement as the large cap camp, but they're all moving higher, right? I think that's an important point to note. And at the end of the day, too, I mean, you look at that S&P, like you said, the S&P mid cap 400 bullish percent. For those that are following along on the platform, it's just caret BPSP MID. It is continuing to move higher, and even on the small cap 600 perspective. It's at 56%, getting close to 58%, was very close, likely going to hit that 58% level, at least with the movement today. It was at 57.97, I believe, yesterday. So likely going to hit that 58% level today. I think the small cap 600 is showing some notable improvement, at least at the time of this recording. But we're seeing that also in a column of X's, and it's still above 50%. More than half of those small cap 600 names are on a buy signal. That's a good sign at the end of the day.
Yeah, absolutely. I definitely think that rate cuts have been a notable tailwind for some of those smaller capitalization stocks, which has definitely led to some improvement in those participation indicators for those mid caps and small caps.
Right.
Always nice to see some confirmation of fundamentals in those technicals.
Yeah. You look at the fundamentals probably more so than me. You're studying for level 2 right now for the CFA.
Correct.
Yeah, I've not broken the book on those studying. So you're definitely looking at more of the fundamental side on a day-to-day basis. We're focused focusing on the technicals though, it's good to see them play hand in hand, right? I mean, you see lower rates typically better for companies that might need to borrow a little bit more, which are going to be those smaller cap companies. Obviously, the Russell 2000 is going to be a little bit different than the small cap 600, just with the profitability and the strength of some of those balance sheets for the small cap 600. You'd expect that to be a little bit better than the Russell 2000. Is that fair in fundamental speak to say?
Yeah, the index selection methodology does
Yeah.
differ there, so that yeah, I would say that's somewhat true.
Right, right. And so, but you would still expect lower rates better for the S&P 600, right?
Absolutely.
Moving forward. And so that's definitely one area that we're keeping a pretty close eye on in that small cap space in terms of areas for potential future development or future growth. We saw small caps really rocket higher in the fourth quarter of last year. And there's a lot of conversation in the first several months of this year that was, are we seeing that rotation? Are we seeing no more Mag 7 go in the small caps from here? Obviously, I didn't necessarily play out. We saw some sharp movement higher in July, some big retracement from the small cap space. But I mean, consistency is what we don't want those massive columns of exits, right? You want that consistent improvement. And that's one area that we'll definitely be keeping an eye out for in the small cap space.
Absolutely. Yeah.
And when we're looking at, not everything was positive, I guess, from the rate conversation. We saw a lot of positives from stocks. We saw from the fixed income perspective, a little bit more muted movement from that rate cut that did happen. The dollar showed a lot of weakness, moved pretty sharply lower after that 50 basis point cut came through yesterday afternoon.
Yeah, no, we're now approaching some of its lowest levels in several years. I think one notable point to keep an eye out for is that $100 support level. It's pretty consistently remained range bound over the last 2 years, kind of remaining between that 107 and 100 range, with that $100 spot or level being kind of a general support. So movement below there could be a sign of further deterioration for the dollar as it does kind of test those levels, which is definitely something to keep an eye on going forward.
Yeah, I mean, when you're looking at the DX/Y on the platform is the chart there, the dollars is historically coming into really up until August of last year, showed very consistent movement. You got strings of buy signals, strings of sell signals. Buy signals led to further buys, sell signals led to further sells. I think I got up on stage last year at our symposium event, we called it then. I was like, this is one of the more consistent relative strength pictures we've seen. And then it turned around and shoved it in my face, was not consistent after that. So I jinxed it there. Hopefully we're not doing anything to jinx it here. We're just gonna run through the technicals. But to your point, it showed a lot of consolidation, really in the low 100s, around that 103-ish mark, just kind of bouncing back and forth between 100 and 107 was that like range that we'd seen throughout the past couple years, really. Approaching that $100 mark again, it moved to a sell signal back in August on the chart, moved to a negative trend in August. Approaching that $100 low that we got to in July of last year, also moving into oversold territory. I think it's another interesting deal to note, that we do have the 10-week trailing trading band that we see on the right-hand side, the point and figure charts. With yesterday's move, we were down at negative 73%, almost negative 74% oversold, which is maybe different than overbought or oversold on a stock or on an ETF. But we definitely do see it come into play. It's just a level of extension or washed out territory, right? And so the direction of the dollar is certainly moving lower for the time being. It is pretty washed out, though,
Yeah, given the
historically.
magnitude of its recent moves, we might
Right.
expect to see a little bit of some near-term mean reversion back up. But generally speaking, yeah, it's definitely something to watch for, I guess, further deterioration. We're focusing on that longer-term picture. But as you
Yeah.
were saying, yeah, its recent oversold levels do indicate some potential bounce going in the near term.
Yeah, there's the potential for it there. And if we do see a reversal up in X's, I mean, this is where I think point and figure charts really do a great job of showing you what's important, right? Because you can clearly see it's a negative trend on a sell signal moving lower. You get down to the bottom of a range, you might get a little bit of support and you bounce up a little bit and then maybe continue lower from there. It's been pretty rare over the past for a while now. We saw the US dollar move to negative 100%, past negative 100% oversold at the end of August. So back on August 23rd, at the end of that week, it was negative 120% oversold. That was the first time it had been more than 100% oversold on an end of week basis since 2018. So it's not down at this low territory all that frequently. So to your point, that's more potential for some kind of mean reversion. Mean reversion to the upside does not mean a trend change, though. I think that's an important point to note. If we did get a reversal higher, you'd be looking toward that very low, like 102 range as a potential bounce point. That's the midpoint on its current trading band. And then if we're continuing to move lower after the $100 mark, you're going to be going all the way down to 95.50 from February of 2022 as the next support area to look toward.
Yeah, I think more than anything, given the consistency of the dollar's trend over time, I think it's important to keep an eye out for where that trend might continue to go. Because once it establishes that trend, it usually continues on doing so for quite a while. So I think it is notable to keep an eye out on the dollar as of late.
Yeah, and we see the dollar movement typically affects a lot of different asset classes, right? We're seeing gold at all-time highs now too. We're seeing international equities haven't really had their day in the sun for a while, and typically a declining dollar has more favorable tailwinds for international equities, which hasn't necessarily come to fruition yet, but will certainly be another interesting place to continue to keep an eye out for as we go through the rest of this year, head through the fourth quarter, and look toward 2025.
Yeah, absolutely. I know some of our Dolly and asset class group scores have kind of favored domestic equities for quite a while. I know our core percentile has been elevated above that 97th percentile for some of its longest time since the indicator's history. But definitely with some of the potential tailwinds from the dollar, international equities could see a bit of a lift, but they haven't shown that just quite yet. But it is something to keep an eye out for potential movement.
Right. Yeah. And it's an important thing to note. We do still see very elevated positions for US equities. Definitely wasn't trying to insinuate that we're seeing weakness there. But strength internationally doesn't have to mean weakness in US equities, right? I mean, we do look at the relative strength, but you could see some of that relative strength come from other areas too. So that's definitely going to be one interesting area to continue to keep an eye out for as we play out through the rest of this year. But I think, do you have any other charts you want us to run through here?
I didn't have anything specifically
great.
calling out to me, but did you have anything?
No, I think that kind of runs through at least most of what I wanted to look at as well. I mean, we could sit here and keep running through charts probably for the rest of the afternoon here, but I know those listeners probably want to get about their day. So thanks, Trevor, for hopping on this week.
Thank you for having me.
And thanks everyone for tuning in this week. We'll be back to touch base on any other movement next week.